Nike stock has been struggling recently, down 21% in the past year. And in fact, if we compare the returns to the S&P 500, while the S&P 500 is up 93% in the past 5 years, Nike stock is down almost 50%. So let's see if now it's a good opportunity to buy Nike stock now that the market cap is $94 billion and analysts have them rated as a buy with 19% upside. Now Nike stock has been struggling massively. The revenue is down 5% compared to the prior year and net income down 48%. Now the company is trading at a 4P of 33, although we'll talk later about the valuation with a discounted cash flow model. Nike's revenue was growing very nicely from 2016 to 2023, from $32 billion to $51 billion. However, in the past 2 or 3 years, their revenue has even declined and it is now at $46 billion. In fact, last year revenue was down 5%, the year prior down 9%, and the year prior only 0.28% growth. And where they saw a massive decline in the last couple of quarters is in China. For example, last quarter they reported negative 13% growth, and their profit has also seen a massive decline. They reached an all-time high in terms of net income of $6 billion in 2022, and it is currently at $2.5 billion. The same with their free cash flow. They reached an all-time high in 2024 and it is now at $2.4 billion. So obviously their margins have contracted massively. This is a company that used to do between 10 and 13% margins, and they are currently at about 5.4% in terms of profit margin and 5.3% in terms of free cash flow margin. Now, the main issue with profit and their margins has been tariffs. First, Trump announced the broad tariff plan in early 2025, and shares of Nike plunged massively. Now, recently, the company said that it would expect $1.5 billion in tariff costs, and they are already seeing this cost in recent quarters. Now, we have seen that they are generating about $2.4 billion in profit. So if they reduce more and more because of tariffs, their profit could even be negative. And for example, if you invest in Nike just because of their dividend, you need to take into account that the current dividend yield, which is 2.57%, currently takes off 94% of their profit, because this is what the payout ratio is. What percentage of their profit is used to pay their dividend. So if their profit continues to decrease, maybe they're going to cut the dividend. So dividend investors need to take this into account. However, regarding tariffs, we have recent news that could help out Nike stock massively, as the Supreme Court said Trump's old tariffs were illegal, and the court ruled that Trump used the wrong law to impose big tariffs on imports. However, Trump, instead of ending all tariffs, used a different law that allows a uniform tariff on all imports. And this new tariff started at around 10%, and Trump said it could go to 15%. But this is temporary, and it can only last about 150 days unless the Congress acts. So Nike could benefit massively from this rule if tariffs are removed. And although I believe tariffs are going to be a temporary issue with Nike, I believe Nike has some other issues, for example, the excess inventory. And the main problem, in my opinion, with Nike is the decrease in demand their products are having. Now, regarding their balance sheet, Nike is in a good financial position as they have $8 billion in cash and $11 billion in debt. Now, one thing that they've done also with their extra cash is buy back shares. This is very positive for investors because you own more of the company and share the profits with less people. And as the stock has gotten cheaper, they've bought back more and more shares. By the way, if you want access to where I'm showing all the data in this video, you have my code to stockanalysis.com in the description. Now let's jump into the valuation, because now the company is trading at a P of 37 and price to free cash flow of 38. However, this is because their profit has decreased massively in the past couple of years. So in order to take a deeper look at the valuation and calculate potential future returns, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $33 per share, middle $57, and high $90 per share. And the stock is currently trading at around $64 per share, which also means that if my low assumptions occur, you would get a negative 1.5% annual return on your money, middle positive 8%, and high positive 16.4%. So I would say Nike is probably trading around fair value according to my assumptions, and I don't think they were that conservative, as I have Nike growing revenue between 3 and 7% annually for the next 7 years. Keep in mind they did negative in the last couple of quarters, averaging a profit margin and free cash flow margin between 7 and 13%, and they are currently doing 5%, but I assume they can go back maybe to that 13%, and I assigned the PM price to free cash flow at the end of the 7 years of 15, 17, and 19. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And you can use this spreadsheet for any stock you want. And in conclusion, although the stock is down massively and has gotten cheaper, I don't think the juice is worth the squeeze here, considering all the issues Nike has, and I believe it's trading at around fair value, and I would need the company to be much more discounted for me to consider investing in this company, considering all the risks and the problems the company has at the moment. I hope you found this video valuable. Let me know what you think about Nike stock in the comments, and I'll see you in the next one.